Welcome back, welcome back. We're here again. I wanted to share another idea on how to use the asset flow calculator just to tell a story with a client. And in this case, I'll kind of show you some of the other inputs and kind of work through some things here in this example. I did preset things up here a little bit to make it easy, and then we'll kind of use the compare button to kind of go side by side and see things. So in this case, client had an old 401k where he was just planning on taking distributions from to satisfy RMDs and handle some income over time. And granted, there's deeper places to go with some of this story, but I think you'll notice overall the story and the way the asset flow calculator allows us to sit side by side. And again, in this case, help the client see the message that I was sharing with them. So here in this case, we got we have data in these three. I kind of pre-populated some of it, so that's why it's yellow. Nothing's included yet in any type of summary or anything like that. We'll get to that in a second. But in this case, $547,000 in the account. And I wanted to start to use some of these inputs to show you. So starting at age 70, what I wanted to show you is we can say, hey, Mr. Client, what do you think this market account's going to earn? He can say it's going to average 6% over time. Okay, that's fine. And then when do you want to start taking distributions from it? Well, he already took this year's RMD, so we were kind of looking at next year is the next time to take a distribution from it. So on the next line here, I said, because I didn't want to start at age 70, I wanted to start at age 71. Let me actually show something here, though. So I can put in age 71 in the second input, and minus $20,000 here, minus 20, and it starts to show the $20,000 moving forward from year 2. But what you notice is that the earnings rate is being pegged by this line right here, and if I didn't put in 6 there, it goes to 0. So I want to add 6 there, and now it's doing what I wanted to do. So in the grander scheme of things, this is going to be one of the inputs that I'm going to look at over time. In this same calculator, what I did was I showed the alternative idea, or the concept of that could improve his outcome. So what did I do? So I took this second tax advantage button, and we're creating a private IRA where he can still invest in the market if he wants, and with a portion, remember it was $547 to start, so this is $347 in the private IRA, and over here in annuity is going to be $200. And the ultimate story that I'm teaching here is that using an income rider on this fixed indexed annuity can help us. I'm going to show you how I did this too. It can help us over time improve the efficiency of the dollars we peel off of the conservative account from an account that's never going to run out even if the account balance runs out. Whereas it allows us to pull less out of the investment side, allowing the investment side to work harder over time. So how do I do that in the asset flow calculator? Well, I take $200,000 and put it into this annuity here, the first input on the annuity, and I started at age 70. At age 71, the income rider I would turn on here for 12.7. But what's interesting is, or what the account will do for us, is it'll start to draw that 12.7 out. I didn't even put an earnings rate in here because there will be an earnings rate. I guess I could put 2% or 2.5 or something like that. It might earn over time. That would fluctuate over time as well. Oh, here's another thing. I would want to hit year 1. So what I do is I want to go 70, I want to go 0, and I want to start 2.5, and then here I would go 71, and then minus 12.7. That's the income rider, and I can still say it's 2.5 or something like that. All right? But what's going to happen inside this account is that it's eventually going to run out. So the way that I can illustrate an income rider on an account like this, because this account would still have a legacy value if the client passed before it ran out, so it's not fully annuitized. But it also has an income that will continue beyond the account running out. So what we can do here is we can use the annuity lifetime guarantee of 12.7, but that is not going to trigger until it's not going to be considered. It's not an annuitization, but we can use the annuitization at the year that this thing runs out of It's cash account. And let's see if this will do it. That's it. So I kind of use age 91. I can say we're annuitizing this account, and it pulls in this number right here, which we want it to be the same in this example right here. So this account will continue to show income even when the account depletes. But it also shows, let me just compare this. It's different from saying let's annuitize at age 71, because if I annuitize at age 71, there's no asset value, right? So I want to go back to annuitizing at 91 to show this story and put that right next to my second account where the client wants to invest in the market. And let's say now, Mr. Client, since you don't have to invest conservatively inside the market because you have your conservative bucket handled, what do you think you could earn? Let's say the client says, oh, well, now I can earn 8 because I'm not, I don't feel obligated to have that money that's in this account invested as much in conservative investments. So I say, okay, great. And let's match the $20,000 income that we had in our first story. So at age 71, we can put on minus $7,300. So it's going to be this account plus the annuity you're going to see in a second. And again, to make sure that the interest continues, right? And listen, the story of fluctuating returns is deeper than this. I just wanted to show the client the strategy of creating more efficient income from the annuity. So I put all this in one asset flow, but I want to show it across 2 asset flows to compare, right? Because we're going to be able to use this compare button in a second. So I'm going to duplicate this. And this should take a moment to pull up. You're going to see what I'm doing here. I'm going to duplicate the asset flow calculator. And then in one of the asset flow calculators, I'm going to use the current situation. So asset flow 1, I'm going to use this I'll use the first one here. It's still actively loading. Todd will probably acknowledge that there's a lot of stuff going on behind the scenes here, so this thing takes a little bit of time to really get fired up, right? So in this first asset flow, I want to include the first account, and what I'm going to do is go over to the summary, and you can see the 547, $20,000, and we're just going to kind of track this, right? That's what I want the clients to do. That's what I want the client to do. Let's see if I can make this the same size. Roughly the same size. And in this second asset flow calculator, I'm going to pull in my private IRA, and I'm going to pull in the annuity, and you're going to see what I'm doing here. Right-clicking those to make them green to pull them into the summary. So now I go down to the summary. Let's make sure I have what I want. Of course, when I open up the window, it's going to be a little bit smaller, so I would have to play with this a little bit. But yes, it has what I want, which is $20,000 distributions, tracking the net worth. $20,000 distributions, starting with 547, tracking the net worth, and just going down to a certain metric, or going down to a certain level of year. We can notice that, like for example, in year 15. 984, 865. And I'm going to show you a compare button in a second. Year 20, 1.3 to 1.0, right? So obviously he can see there's logic to separating assets and creating different jobs for them, and then more importantly, creating more efficient income, taking advantage of the actuarial science piece. So how can we show this side by side? Here's the compare button. So now that I have 2 asset flow calculators or more, I can use the compare button. And the compare button brings up this little tab that will allow us to do comparison A, B, C, D, allow us to do 4 of them. So I can choose asset flow calculator 1, the summary from asset flow calculator 1, right? $20,000 of income, what the account looks like. Asset flow calculator 2. $20,000 of income, but you can see the side by side, you can see how this account is improving outcomes, right? See the difference there? So, and if we had more than 2, it would allow us to pull in different ones there. And I don't know why it's saying, oh, here we go. I guess you can not, to take it out, I guess you can click not use there. So you can add it, and then if you're like, oh, I didn't want to add it, you can not use it, right? But side by side, it shows the outcome, shows what I want to show, starting with the same numbers. I actually don't know why it's changing the numbers there a little bit. I have to dig into that some. But that is, oh, that was because of that's right, it was the earnings. The earnings were slightly different. That's what it was. Yeah, because here it was 6 because they were blending conservative with, kind of equities. That was his plan. And here we were able to break it out into different jobs. So hopefully that helps a little bit. And one last piece I guess I'll show you too is when you have the summary and stuff, if you wanted to print some of this, here's the print button. And we can print, and what pulls up when you do the print button is you get this little input that shows you all the different things that you have content in, and you can say check them all, you can uncheck them all, you can check anything that's included, you can individually check if you wanted to. So let's actually just do the check included here. There's an important information tab and there's a summary. So watch this. So we can do print preview. And what's going to come out of this, here's a nice little information disclaimer page that Todd put together here. So that actually comes up. So you can print that, and then you have to close it, and then the next one's going to come up. So the next one that comes up is probably going to be the individual account. Oh no, the next one that comes up is the summary. So we have the summary. There we go. See, this is the replica of the summary page, right? And then if we close that, the next one will come up, this green one here. And this is a breakdown of the individual 401k account. Perfect. Yep. With the earnings rate, earnings. Didn't take taxes into account in this, of course. And there it is. So I'll wrap up this tutorial on that note. Have a good day.